If you put together 50 persons in a room and you ask them one question, why do they prefer to keep their money in a commercial bank account rather than invest it? At least 80% of them will give you one of these two reasons. Number one is that they do not have enough to invest. So there is this mindset among lots of people that investment is for rich people, people that can afford to invest millions of nairas. And then the second category of people believe that investment is risky. Yes, it is risky, but when they are talking of risk, they mean high risk. There are different kinds of investments and there are different levels of risk ascribed to them. Not all investments are high risk. If you are in this category of people that believe that investments are generally high risk, to compare investment to Ponzi schemes, maybe you've been scammed in the past, then this video is for you. I'm going to show you one type of investment that you do not even need to stress. You just need to deposit your money and the money will start working for you. You do not need to stress about what the market is doing. It will compound on its own. You just need to put in the money and wait. Let it appreciate over the years. Hi guys, welcome back to my YouTube channel. If you are new here, my name is Adiroke. I'm a legal practitioner and I major in capital market operations. What do we do on this channel? We talk about what to invest in, where to invest, and most importantly, how to invest your money for potential returns. So let's talk about mutual funds, one of the most beginner-friendly investment options in Nigeria. Like with mutual funds, all you have to do is put in the money and go to skip. When you put money together with family and friends to invest in a particular thing, that can serve as a mutual fund. The only difference is that with mutual fund, there is an investment expert known as the fund manager that's created this fund and has created an objective for the fund. All you have to do is to put your money in it. So mutual fund is simply pulling resources together to invest in a particular objective or a particular type of asset or investment. That is why we have different kinds of mutual fund, because different funds, different objective. So if the objective of the fund is to invest in stocks, we call it an equity mutual fund. When you hear equity, stock, shares, they mean the same thing. They mean that you're investing in companies. So we call that equity mutual fund. If the objective is to invest in short-term debt instruments, fixed income instruments, we call that money market mutual fund, or you can simply say money market fund. So it means that you're investing in short-term fixed income instruments like commercial papers, steel bills. That is the purpose of the fund. Then we have a mixture of this. That is what we call the balanced fund. So mixture of equity and money markets instruments. So on the one hand, you can have like maybe 60% equity, you can have 40% money markets instruments. So for that reason, we call it the balanced fund. Also, we could have the halal fund, which means that the purpose or objective of that fund is for Sharia compliant investment. So for Muslims that are looking to be Sharia compliant, your best bet is an halal fund. You also have a fund in which the purpose of that fund is to invest in real estate assets. You could also have one in which case it is to invest in startups. So mutual funds, there are different kinds of mutual funds, but the most popular ones in Nigeria are basically the equity fund, the money market fund, and the balanced fund. The halal fund, you can also find it on most of these mobile applications for investment. But care must be taken because each type of mutual fund has different level of risk attached to them. For instance, the performance of an equity fund is largely dependent on the performance of the stock market. And we all know that the stock market is sometimes positive and another time negative. So when the stock market is positive, expect your equity fund rate to be positive, and when it is negative, it will also have an effect on your equity fund rates. But yet again, you have to remember that the higher the risk you take, the more you start to get in terms of returns. So in a positive stock market, equity fund usually return more than any other type of mutual fund. Last year, the Nigerian stock market performed excellently well, and most of the equity funds delivered not less than 40%. We have the highest one, which is the Rock Magnus fund, returning as high as 70-something%, and Stanbic equity fund followed suit, returning about 67%. So most of the equity fund did do less than 30-40%, and we had the money market fund doing about 20% on an average. But not to worry, better safe than sorry, right? If you are averse to risk taking, just stick to the money market fund and let time and compound interest do the rest for you. So for instance, Nigeria offers one of the most competitive interest rates in the world, so you can be rest assured that when it comes to money market funds, you are getting the best rates. Currently, you are investing in the money market fund, you'll be getting between 14 to 16%. But with your peace of mind, you do not need to worry about any calculations about any stock market. All you have to do is to contribute a certain amount monthly into the fund and let compound interest do the rest for you. So let me give you an example, right? Let's say you start to contribute 50,000 naira in a money market fund and you continue to do so for the next 20 years. If you are saving that in your bank account, ordinarily what you would have is about 12 million. But if you invest in a money market fund and we put the interest rate at an average of 12 or 13%, you'll be getting about 50 million after 20 years. 20 years, it's supposed to give you 12 million naira, but if you are investing, you are getting over 50 million naira. And before you say, oh, 20 years is a really long time, 2015 was just how many years ago? And now we are in 2026, moving on to the next decade. So if you're watching this video and you're working class, this is the perfect retirement plan for you. Also, if you have a child between the age of 1 and 3 and you want to save for their future, maybe for their tertiary education abroad or in a private institution, this is also the perfect plan for you. With as low as 5,000 naira, you can start to invest for the future. So how do you get started? Thanks to technology, we have several mobile investments applications. All you have to do is download one. An example is CarryWise. We have another one which is Ladder. Choose your preferable application, download it and complete the KYC process. After doing that, click on the available mutual fund that you wish to invest in and automate a certain amount. Remember, the list is 5,000 naira, so do not be in a hurry to compete with anyone or save higher amounts that you cannot afford to save. Start at your level. Even if it is 5,000 naira you can afford to invest now, start with that. As your income progresses, you also can progress in your savings and investments. That said, that is the end of this video. Please give us a thumbs up, subscribe if you are yet to subscribe, turn on the notification bell so that you can be the first to watch our videos when they come out. Also share to your loved ones, your family and friends. Thank you so much for your support. Thank you. If you have a question, please put it in the comment section. I'm more than ready to answer your questions. And if you want me to do a video on a particular subject matter or topic, drop it in the comment section and I'll be glad to indulge you. Bye.